Now we will discuss the essential Sharia principle governing the Islamic markets. And after finishing this discussion, you will be able to explain how capital market transactions can meet Sharia requirements, and you will be able to identify and explain Sharia governing principles that underpin Islamic capital market instruments. First of all, we will discuss the connectivity between international Islamic capital markets compliance and with Sharia principles. Capital markets is an integral part of the economy, and it generates a platform where the investors invest and create an economic activity. So those investors who are based on Islamic concept of investments, they are looking for those Islamic options which are Sharia compliant. When we say Sharia compliance, means in every IFI or international like Islamic financial institution, we make Sharia boards, and it is approved by them. They have great knowledge of Sharia and principles of Islam. They advise which product is according to Sharia and which product is in denial of it. So in terms of ICM, Sharia compliance is really important. In terms of capital market, these are the sources of direct investment where people directly invest, buy and sell, and it leads to the activity. It involves the risk factor into, and this risk has to be managed but through effective risk mitigation techniques. In terms of Islamic Sharia, of course, Islamic teachings are very important. They promote any form of mechanism that facilitates the need of the people to be it's for religious and financial purposes. Disclosure of information according to Sharia is really important. We should not hide anything between the stakeholders, and informing people about their investment margins, profits is really mandatory according to the Sharia principles. And in capital markets, all transactions should be based on interest-free mechanisms, and for that we have certain kind of products which I will discuss in details. There are so many principles of Islam which we should broaden in practical execution of the ICM products and services, broadly categorized into equity market and the structured products that both based on the securitization and the derivative products. Islamic contracts we put into, and we see either they are equity based or they are structured products, and they are in alignment of the Islamic principles. In terms of equity market, it is one of the component that is we can observe in ICM. It is a share represent pro rata beneficial ownership and the interest of the shareholder in the company. Conventionally, these are the instrument that we buy, and we make money based on speculation, market fluctuations. But in terms of Islamic, of course, when we say Islamic equity, it means that we are buying asset, a portion of asset through a sophisticated mechanism. So this asset will be leading to some profits, and this is how the Islamic equity in general operates on the concept. In terms of Musharaka contracts, Musharaka is based on your joint ventures. So a capital market create a platform between investors and the companies, and for a specific share for a time being they become for a common objective. They become the joint venturist, and they gain profit and loss. Capital is the key element in the investment. By buying share, an investor is deemed to be a shareholder of the issuing company and able to share the profit and in the shape of a dividend. Profit will be shared amongst all other ordinary shares on pro rata basis. Liability of the loss is limited to the capital they invested. So in order to give a limited liability concept. From a Sharia perspective, an investment is only valid if it is channeled to the business activity which are allowed. As we already discussed, there are screening procedures. There are certain industries you cannot invest into because these are against the ethics and beliefs of the Islam, and Islam strictly prohibited not to use those things. So you cannot be an investor of those things which is prohibited. Therefore, there is a concept of screened and there is a concept of approved business activity. There is no preference of one investor over the others in terms of profit distribution. They are all equal. An investor under Musharaka can sell their shares to another investor based on the market value. These are certain features which we should keep in mind. Already we have discussed mutual funds. An Islamic investor may purchase investment in mutual funds. These funds in public listed companies, and the private equity is in the non-listed company. Those people who invest in this kind of mutual funds, they become like a partner, or we call as Musharaka partners, and they are subject to the Sharia compliance in general. A Musharaka contract is most commonly used contract in the equity or the stock markets. In terms of Islamic bonds and sukuk, they are generally Islamic fixed income derivatives instruments. Islamic bonds, unlike equity, which is primarily based on the concept of profit and loss sharing, will not assume equity investment risk. Being a fixed income instrument, the risk is limited to the creditor of the issuer or the obliger, as the case may be. In Islamic bonds, as practiced in Malaysia, the credit risk of the payment of the principal and the profit lies with the issuer, who is actually the debtor. So in sukuk structure, such as sukuk like Ijara, the credit risk is associated with the obliger, who is the lessee. So this we will discuss more in detail about Ijara or Ijara Mustasniya and other products. Islamic bonds represent the right to claim the payment, like IOU means this is your liability. Basic principle is the indebtedness and must originate from a lawful contract in order to legitimize. Scrutinization of debt is really important, and it's an essential. It's a process of converting something into the cash equivalents in the form of paper or securities that are traded in a secondary market. And AUFI is already developed a standard on investment sukuk, which is standard number 17, that clearly tells that all assets by the financial or tangible can be scrutinized in order to secure the investors. In terms of trade receivables, they can be scrutinized, but does not mean that the securities arises from receivables. Securitization can be freely traded, at least from an international investor's perspective. And this is also, if we will go through in another book for Sharia Standard 17, where the focus is how to avoid the riba in such kind of transactions. Sukuks are monetary denominated participation certificates of equal unit value issued to investors. Like Islamic bond, they are a result of the process of securitization. But somehow Sukuk refer to the process of aggregating tangible assets or as interest in a project into a paper or securitization for the subscribed investors. If there is any element of receivables such as sukuk, ijara, these receivables are deemed to be an integral part of the assets. There are sukuk, which is in trading. These are compliant and free from riba, as the underlying assets are not receivable or the financial assets. Sukuk holder selling sukuk to another investor in the secondary market will deem to have sold ownership right over an asset, so this will be legitimate. Contracts, we do contracts, and there are certain scholars, they have endorsed Shari'ah principle governing the issuing and trading of sukuk simply because there is an underlying asset covering this kind of option. We will discuss about Islamic structured products. These are like mainly the Islamic derivatives. They also fall in the category of ICM instrument. These instruments mainly cover the forward, future, option and swaps. This is we generally discuss just now how it works. But in terms of derivatives, salam is a future transaction. Which will be done today, but the delivery will be in the future against the advance payment. Salam sales can lock in the price of the good in the future. We have urban, that is money paid to the seller as a down payment. The payment of this down payment would give the buyer, the payer, the right to purchase the underlying asset. It's like, and then we have Wad. Wad is unilateral binding promise by one party to sell or to buy goods in the future at the price that is fixed at the time of the promises. So these are three kind of future transactions, which is of course is going to add value as the investor in terms of Islamic options to invest in. Same way, if you see that these are three broad concepts that we discussed about ICM, and that it includes the equity, it includes the Islamic structured products, and in the last we discussed the dawa, that is what can be adopted to create an Islamic instrument, while the principle can be used for the Islamic options.